Welcome back, everyone. I'm Rob Booker. I'm the best-selling author of Adventures of a Currency Trader. I've been a trader for 18 years. Welcome to our beginning lessons on FX Trading 101, sponsored by Forest Park FX. In this lesson, I want to talk to you briefly about what an FX dealer is. So you're going to see, if you type into Google, hundreds of FX dealers appear in the search results. And I want to talk about the major kinds of FX dealers and what kind of things you would look for in an FX dealer. Now, we're talking about spot FX. What that means is you're not trading futures, you're not trading stocks, you're trading what is called spot FX, or just sort of the raw FX settled on a daily basis. That doesn't really have any major repercussions. You can still bet that it's going to go up or bet that it's going to go down. An FX dealer is a company that is set up to be an intermediary between you and a bank as you trade. Now, there are two major kinds of FX dealers. One is what people refer to as STP, or straight-through processing. There's a lot of arguing online about these kinds of things, as you'll see as time goes on. This kind of dealer is said to be a dealer that will immediately match your trade up with someone else inside the network or a bank, immediately. So that all the FX dealer is doing is acting as an intermediary to immediately connect you to another person who wants to take the other side of your trade. And if you win, that other trader is a loser, and if you lose, the other trader is a winner. It is thought that straight-through processing, or it is widely considered to be maybe a better way to trade. I'm not sure that's really the case, but you're going to see people talk like that. You're going to see people that prefer to have their trades matched up with another trader immediately. The other kind of FX dealer is a dealing desk FX dealer. Now, what this refers to is that, let's draw a picture of your computer here. So you're trading on your computer right here. And then your trade is going to the FX dealer right here. So that's going to the FX dealer right there. In a dealing desk situation, this dealer takes the other side of your trade. If you say you want to buy Japanese yen, they're selling you Japanese yen. And if you lose, they win. And if you win, they lose, because they're the other party to the trade. And it's often thought that, wow, if you're working with a dealing desk broker, they're on the other side of the trade. And this could end up being sort of an evil, nasty kind of company, because they could stop you out of your trades, or they might want you to lose so that they can win. And in the early days of Forex trading, that was really true. There were a lot of bad players in the Forex market. They would be companies set up that would take the other side of your trade and then stop you out and argue with you on the phone and whatever else. But these days, there are very few significant differences between the way that you are quoted a price on either kind of broker or dealer. And there is very little difference in how well you're going to do as a trader in dealing with either one of these two types of brokers or dealers. Generally speaking, if you're dealing with a dealing desk broker, you can execute larger trades without a problem, because they will just take the other side of the trade. If you're dealing with a straight-through processor and you're trading millions of dollars, you might have trouble getting some of your orders filled all in one chunk, because they have to match you up with another trader inside the system or a bank. But for almost everyone working or trading or whatever, there are not major problems with one of these or the other. And I think that all arguments about this are basically a waste of time. What you really want to look for when you are choosing a dealer is the company size, or the years, how many years they've been in business. You want to check if they're a public company. And you want to check that the regulatory authority, so the reg authority, is either, you want your broker to be regulated by, and this is my opinion anyway, you want them to be regulated in the UK, the US, or Australia. These are the major regulatory bodies that are the most sophisticated and are doing the best audits on brokers. Generally speaking, if your broker is not regulated by one of those authorities, the European authority is pretty good too, but these three are the best. If they're not regulated by those authorities, you may be dealing with a broker that isn't going to answer to anyone if you have a problem with your broker. And I'm exchanging the words broker and dealer interchangeably, but they're really FX dealers is really what they're called. All these videos are sponsored by Forest Park FX. If you're interested in FX trading, contact Forest Park FX to get cashback rebates on every trade you place. You can contact them at forestparkfx.com. Remember, trading involves a substantial risk of loss. Terms and conditions will apply. And you can find me at robbooker.com. I'm happy to be with you, and we will be right back with our next lesson.